Tradesman, and today I'd like to go over current market conditions and trade of the week. Disclosures are very important. Please read them. If this is the first time you see these disclosures, I encourage you to visit the link on your screen to understand the risk associated with trading stock or options. Since I'm going to go through the trade idea of the week and review current market conditions. All right, this is the workshop we do have on Friday, 9:30 a.m. Central, 10:30 a.m. Eastern. Hopefully you can join me for 1 hour discussion of current market conditions. But let's look at the stock forecast toolbox for today. This is our main model. You can analyze any stocks or ETFs or futures. You can see for today support 585, overhead resistance at 597. We're at 600. Our model is turning bullish, basically saying that potentially we could break the 600 level and get to the 620 level. We have AMD, Google earnings, Amazon earnings, and we have Fed decision, not Fed decision, but unemployment data on Friday. If all of that information is positive, then potentially we could break to the new highs. But for now, 610 is all-time high, and that's your major overhead resistance. As we approach in 610, I would propose to sell until we have a new signal and the market is able to break through the overhead resistance. Still uncertainty about the tariffs, when, who, how much, and that is driven by the news, and volatility is elevated right now. Long-term prediction, similar idea. For the months of February, we could revisit the lows, January lows at 576, on upside 620. So it just depends on the tariffs, it depends. Earnings season probably at this point is net bullish. Overall, I think markets, stocks are doing better than expected. We've seen Pelletier earnings, IBM earnings. So we do have few home runs out there, and but there's still tariffs and macroeconomic data which can and digestion of DeepSeek news, right? You know, is AI in full force going forward? According to Pelletier, the answer is yes. According to Microsoft, you know, maybe not so fast. So, you know, we'll see what the Google and Amazon will say shortly. But I would be a seller at 610, 620. I would be a buyer at 576, 585. Pelletier had a strong earnings. Continue to gravitate toward 100 strike, and in terms of 10-year yield pull back 4.5, so 10-year yield is stable, that's positive for the bulls, but oversold. And dollar also oversold and pulling back, which is also positive for the market, but no new signal, right? It's still staying above 50-day moving average, above these key support levels. For the market to grind higher, we need interest rates and dollar to drop. Maybe it's the unemployment data on Friday. Maybe it's the fact that tariffs are kind of not the worst case scenario so far, so we'll see. VIX is still elevated, currently at 17 level, but off the highs of 2021. QQQ is up, grinding back up above 50-day moving average. Semiconductors are up, spiders are trying to reclaim all-time highs, and even small caps are also participating in the rebound and close the gap from the Sunday tariffs issue. So I'm bullish on the market, but I would be cautious, right? I prefer to be a buyer into pullbacks. This is a perfect example where Netflix had a signal this week and last week. I bought Netflix. I trimmed as it approached 1,000, but I would be a buyer on a pullback. If it gets back to 960, if it gets back to 950, I would consider buying Netflix again on pullbacks. And finally, we do have a live broadcast, live trading room tomorrow. Please join us at 8:15 in the morning on Wednesday, or Central Time, or 1:55. And if you like the content, please hit subscribe, and I hope to see you there. Thank you very much.